Welcome to Capital Conversations. I'm Glen Gould. Today's episode is titled Fundable Fast, a 6-month blueprint to build business credit with no revenue. I'll walk you step by step through a compliant, repeatable sequence you can start this week to establish a separable, fundable business credit profile, fast enough to matter for near-term growth windows.
Why this matters. Founders who can show business credit separate from their personal files unlock non-dilutive capital, better vendor terms, and leverage when investors or customers move quickly. Over the next 20 minutes, I'll give you a conservative 6-month timeline, the exact documents lenders expect, which vendors actually report to business bureaus, and how to move from net 30 accounts to a business card and then to term financing, while minimizing personal exposure. If you're ready, let's get tactical. Section 1. Why business credit matters, and the legal and banking foundation from month 0 to month 1. First, the distinction. Personal credit reflects your individual borrowing history. Business credit reflects the entity's financial behaviors. Lenders read business files to understand the consistency of operations, bank deposits, vendor relationships, and trade line payment history. Proper separation isn't just bookkeeping, it's risk management. Establishing separation demonstrates to a lender that your business can be underwritten as an entity with its own capacity.
Month 0 to 1 checklist, the legal and banking items you must complete immediately. Form a legal entity, LLC or S-Corp, depending on your tax plan. Obtain an EIN from the IRS. Register a business phone and a professional address, virtual office or co-working address if necessary, and open a dedicated business checking account. Important, use the exact legal business name on all filings and vendor contracts. Mismatched names cause reporting breakdowns.
Documents lenders commonly request at this stage: articles of organization or incorporation, EIN confirmation letter, CP 575, a business bank statement showing deposits and outgoing transactions for at least 30 days, an operating agreement or bylaws, and a current invoice or contract demonstrating business activity. Collect digital copies and a simple 1-page narrative explaining your business model and expected cash flow sources. That narrative matters more than you think when bank underwriters review thin files. Section 2. Starter credit, month 1 to 3, and scaling to small lender products in months 3 to 6. The fastest, most reliable path begins with trade lines that actually report to business credit bureaus, vendor net 30 accounts, and a handful of secured or starter business cards. Focus on vendors known to report to Dun & Bradstreet, Experian Business, or Equifax Business. Verify before you onboard them. Good, commonly used vendors include office suppliers, certain fuel card providers, and a small set of B2B service vendors. Always confirm by asking the vendor, do you report business payments to Dun & Bradstreet or Experian Business? If they don't count them toward your reporting strategy. Practical starter sequence. Week 1, open 2 net 30 vendor accounts that report. Week 2 through 8, place predictable recurring purchases and pay on time or early. Parallel step. Apply for a secured or starter business credit card that reports to business bureaus. Use it for small, recurring expenses and pay in full each cycle. At month 3, file for a DUNS number if your vendor ecosystem or government contracting plan benefits from it, and if eligible, register in sam.gov. This is optional, but it accelerates institutional credibility for certain lending channels. How to verify vendors and avoid wasting time. Ask for references, check their own business credit listings, and look for recent customer reports online. Avoid services that promise instant reporting without a clear reporting partner. Those are often dead ends. If a vendor says they report, get the reporting frequency and the bureau names in writing so you can monitor the trade line. Month 3 to 6. Scale from vendor trade lines to small business cards, lines of credit, and term loans. Key behaviors that unlock these products are consistent on-time payments, steady bank account inflows, and low utilization on your starter card. Timeline example. By month 4, you should have at least 2 vendor trade lines reporting, 2 to 3 on-time cycles, and 1 starter card with 2 billing cycles paid in full.
With that, many banks or online lenders will consider small business credit card upgrades or a short line of credit, often under a personal guarantee, but increasingly with limited or no revenue requirements if your account activity looks credible.
When applying for cards or lines, present a cohesive dossier. Include a brief business narrative, bank statements highlighting consistent deposits, copies of the vendor trade lines, your EIN and formation documents, and a simple cash flow forecast showing planned use of funds. Lenders look for clarity and consistent behavior more than high revenue in these early stages.
Section 3. What lenders actually check. Quick case timelines, risks, and an action checklist. First, what lenders check. Personal guarantee realities, business bank statements, frequency and size of deposits, vendor trade line history with bureau entries, and a credible use of funds story. If a personal guarantee is required, it's often limited to early stages. Be prepared for that reality and structure contracts to protect personal assets where possible.
2 short founder timelines to set expectations. Founder A, service business with minimal inventory. Month 0, forms LLC, opens bank account. Month 1 to 2, secures 2 net 30 vendors that report and a secured starter card, generating 5 to 10K in deposits per month. Month 4, applies for a 10K business card or 15K line based on steady deposits and trade lines. Founder B, early e-commerce store. Month 0, forms entity and EIN, sets up merchant account. Month 1 to 3, uses vendor accounts for packaging supplies and reports 2 months of on-time payments. Merchant sales show daily deposits. By month 5, qualifies for a small term loan or 0% introductory business card to finance inventory. These are realistic, conservative outcomes, not guaranteed, but achievable when the sequence is followed. Risks and mitigations. First, do not mix personal and business finances. That invites personal liability. Second, verify vendor reporting before you rely on them. Third, maintain weekly monitoring of your business bureau files so errors can be corrected quickly. If timelines slip, consider short-term secured cards or invoice factoring as contingency options while you build trade lines.
Immediate action checklist. Start today. 1. Form your entity and get an EIN. 2. Open a business checking account and use it for all business transactions. 3. Apply for 2 net 30 vendor accounts that explicitly report to Dun & Bradstreet or Experian Business. 4. Apply for a secured or starter business card and use it responsibly for recurring payments. 5. Collect the lender dossier, articles, EIN letter, bank statements, invoices, and a 1-page business narrative. If you want downloadable templates for that dossier, subscribe to Capital Conversations. We'll release templates and deeper episodes that walk each vendor and application step by step.
Thank you for joining us on Capital Conversations. I hope today's discussion provided valuable insights for your funding journey. Remember, securing the right capital is a crucial step in building a successful business. Subscribe for more tactical episodes, templates, and timelines, and reach out with topics you want unpacked next. Keep building. Let's talk capital. Until our next conversation.